Alrighty, so for today's project, we will be doing Toyota and Chevy, brought to you by Noah, Eric, Kieran, and yours truly, Darius. This is the Chevrolet income statement, and this is the Toyota income statement. As you can see, it's in yen in the millions, so it roughly translates for the net income March 31st, 2022 to about 21,000 USD. Toyota's sales revenue increased from 27 million to 31 million in 2022, indicating an improvement in the company's performance. Additionally, Chevy's sales revenue increased from 127 million to 156 million, indicating a notable improvement in the company's performance. An investor can interpret the sales revenue of both companies as a reflection of their solid financial standing. Toyota's declining net income loss from 19 million to 72 million in 2022 is a sign that its financial health is declining. Toyota's net income did, however, go up from 2.2 million to 2.8 million in 2022, demonstrating a steady performance. On the other hand, Chevy's net income loss reduced from 9.9 million to 9.7 million in 2022, showing that the company's financial status has improved. Chevy's net income also dropped from 14.4 million to 14.2 million, indicating a marginal loss in performance. An investor might therefore believe that the net incomes of the two companies represent their financial performance in different ways. Total costs and expenses for Toyota from 25 million to 28.3 million in 2022. This increase in expenditures and expenses is a symptom of underperformance because it surpasses the growth in the company's sales revenue in 2022. Chevy's total costs and expenses increased from 117.6 million to 146.4 million. However, this increase in cost was more than offset by the company's sales revenue, which rose sharply from 127 million to 156 million. The increase in overall spending and expenses appears to be a planned investment in Chevy's growth, despite being a symptom of Toyota's diminishing performance. More research into the breakdown of expenses is needed in order to identify the specific reasons for the increase and determine whether they are long-term sustainable. Assets and liabilities. So as you can see, this is going to be Chevrolet's total current assets. In the picture above, we can see that this is Chevrolet's total current assets. We can see that they have had an $18.3 million increase from 2021 to 2022. That's a 22% increase, which is huge considering 2021 was considered a coronavirus year and we're still able to maintain their assets. The increase in 2022 shows that it can make a huge breakthrough and be valued more. We can see that the cash and cash equivalents went slightly down, but inventories increase, substantially making Chevrolet invest more into their inventories, making their money work. Toyota's total current assets. It shows that they did not grow as much as Chevrolet did. They had a little bit under $100,000 increase from 2021 to 2022. That's a 4% increase compared to the 22% increase from 2021 to 2022. This is 18% less than what Chevrolet grew. In the balance sheet, we can see that Toyota had a slight increase in each amount except for its other financial assets, which dropped tremendously. Based on the total current assets of both companies, to an investor, Chevrolet is the better option to explore. The current liabilities balance sheet, we can see that the liabilities increased 22% more from 2021 to 2022. Automotive has increased tremendously due to them being able to produce more cars since coronavirus. This means that they have more vehicles that they can sell and make a profit. Accounts payable also has increased a great amount, but it's also due to the fact that they were able to hire more workers to continue to create splendid vehicles. The Toyota total current liabilities has grown 1.7% from 2021 to 2022. This is huge to know considering that Chevrolet has an equal percentage of growth in liabilities and assets. If this is the case, then Toyota has had more of a growth in assets than liabilities by 2%. Toyota is limiting its liabilities while trying to create more assets to have more of a profit in the long run. Due to Toyota's assets being 2% more than its liabilities shows that it's also a great investment. Investing activities. Starting off with Chevy's statement of cash flows for 2022, one of its largest investing activities was purchases of finance receivables, which totaled to $33.9 million, about $900,000 more than 2021. The reason 2022 saw more investing in finance receivables is because of the COVID pandemic. As less people were purchasing new vehicles in 2021, causing investing to decrease, Chevy's second highest was the purchases of leased vehicles, which totaled to $11.9 million, about $2.6 million less than 2021. 2022 saw a decrease in purchasing leased vehicles, most likely due to a decrease in consumers leasing vehicles. According to Toyota's statement of cash flows for 2022, its highest investing activities were additions to equipment leased to others, totaling to $2.2 million. Following this, additions to the public and corporate bonds and stocks, totaling $2.4 million. The additions to equipment leased to others is $11,000 higher in 2022 compared to 2021, likely due to the economy recovering from the pandemic, which raises investment. However, additions to the public and corporate bonds is $301,000 less than 2022. Regarding Chevy's investing choices for 2021, we can agree with both investment choices that there is not much difference in both activities compared to 2021. As for Toyota, less money going towards additions to corporate bonds and stocks does seem odd, as 2022 proved to be a stronger year in terms of finances. The left is going to be 2022, obviously, and then the right is going to be 2021. As for the same right here. Financing activities. Chevy's largest financing activities are also shown in the statement of cash flows for 2022. The biggest was payments on debt, which was $39.6 million compared to 2021. It is $8.2 million less. This could be due to multiple factors, such as notes signed compared to the year prior. The second largest financing activity was payments to purchase common stock, which was $2.5 million, where there's no record for 2021. There must not have been any buyers of common stock, or buyers were not given the opportunity by Chevy to buy common stock. For Toyota, its biggest financing activity was payments of long-term debt, which was $8.8 million, about $3.4 million more than 2021. The reason for this could be as the economy was recovering from COVID, the company could not pay off more debt in 2022. The second biggest financing activity was dividends paid to Toyota Motor Corporation common shareholders, totaling to $700,000, which is $804 more than 2021. This could be because more shareholders bought common stock in 2022 compared to 2021. Chevy not listing an entry for payments to purchase common stock for 2021 is interesting, but the strong number for 2022 shows that purchasing common stock could be a smart idea. Along with that, the lower figure for payments on debt shows the company may have had less liabilities to pay. Regarding Toyota's financing activities, the payments of long-term debt being $3.4 million more than 2021 could mean that they have paid off more long-term liabilities than the previous year. We would strongly agree with that finance activity. With that said, the payments of dividends to shareholders. Financing activities for Chevrolet and for Toyota. Again, left is 2021, right is 2022. Now we are on to market value. this is explaining the other aspects of why. Market value is the value of a company in terms of the stock market. This value is comparable to other companies also in the stock market. As for the stock price, the price is always fluctuating for a multitude of reasons. It is given for every issue shared by a public company. It displays how well a company is performing from the company's first sale to current. This is going to be Chevy's. As you can see, currently Chevrolet has a stock price of $33.04 per share, $33.04 per share. It has a consistent upward trend according to the graph. There are fluctuations like every market summary, but it is steadily increasing. Now, as for Toyota, it is $137.33 per share, but the most obvious differentiation is that it's red. That means it's currently down, showing that it has a decreased stock in a downward trend. Something else to consider before investing into a business is the business structure. Not only does business structure display personal liability and how much you pay in taxes, but it's also important to investors. Investors wish to put their money where there is less risk to maximize profits, so businesses that have a stable strategic direction with low risk are eye candy for the investors. To conclude our findings on the annual reports of both companies, we have come to the conclusion that the company that has the most potential to continue to increase is Chevrolet. The company has maintained a good standing with investors. It has continued to increase its assets by having a 22% increase. Its stock has maintained itself through the years, while Toyota dropped at least 40% in stock price. Chevrolet's losses and liabilities are showing that the company is using its resources and using their money to better improve the company's profits. Our analysis has shown that Chevrolet is the better company to invest in. Thank you for your time.